World's reserve currency is on the verge of collapse. In a shocking turn of events, China has joined hands with its allies to trade using yuan, breaking the US dollar. This may kickstart a trend in world economics, and many countries may very soon follow in China's footsteps, deeming the dollar powerless in global markets. Let's discuss the latest developments of this deal. How did the US dollar become the world's reserve currency? Before we get into China's big achievement, let's take a look at how the US dollar came into power in the first place. Following World War I, the United States quickly rose to become the dominant financial power despite joining the war relatively late in 1917. This newfound strength allowed the US dollar to replace the pound sterling as the world's reserve currency and resulted in the country receiving significant inflows of gold during the war. The importance of the US dollar was further solidified in 1944 with the signing of the Bretton Woods Agreement by 44 countries. This created an international currency exchange system with the US dollar serving as the peg, which was in turn linked to the value of gold. Today, world governments hold US dollar reserves to facilitate international transactions and allow central banks to intervene in foreign exchange markets to support their own currencies. And the dollar has popularly maintained stable pricing in global markets such as that of oil. And now the dollar is drastically losing its dominance to the Chinese yuan. Why is dollar getting unpopular? Let's face it, it was bound to happen. By the late 1960s, the competitiveness of European and Japanese exports began to challenge that of the US. They were catching up fast, and there was nothing the US could do to stop them. The abundance of US dollars made it difficult to maintain the peg to gold. Then, in 1971, President Nixon ended the direct convertibility of US dollars to gold, which effectively ended the gold standard and removed the limit on currency printing. While the US dollar has continued to be the world's reserve currency, its purchasing power has declined over time. Many countries have expressed concern about the US's dominant position in the global financial system and its ability to use this power as a weapon. In response, some nations have been exploring alternatives to reduce the US dollar's hegemony. In the past decade, the US appears to be less socially and economically stable than it was before, causing concern among other nations. The series of bank collapses in the country is a major issue. So, how has the US been keeping its own financial institutions stable this whole time? It seems this trend downwards de-dollarization is driven by the need to decrease dependence on the dollar, which is assumed to be a source of increased vulnerability for other countries. The game is all political, and countries may be getting the upper hand very soon. How did China break the dollar? China has always been the arch nemesis of the US dollar and has lobbied to replace it as the only medium for global financial transactions. And now the war may finally have been won by China because of its latest move. When the US put sanctions on Russia in the wake of the Ukraine war, China worried for its own economy and did not ever want to be in a similar position. The US-led move to sanction President Putin was supported by 44 countries, including Australia, Canada, Japan, New Zealand, South Korea, and almost all of Europe. As the US and other Western nations imposed more and more economic sanctions on Russia, Moscow and the Chinese government began to collaborate to reduce their reliance on the dollar and to establish cooperation between their financial systems. They've planned to do this by directly exchanging payments between their respective currencies, without having to first convert to a trusted third-party economy, sidelining the US in the process. The move is expected to reduce transaction costs and foreign exchange risks associated with converting their currencies to a third-party currency, such as the US dollar. The move has already resulted in a significant increase in ruble-yuan trade, with trade volume rising by 80 times since the invasion in 2022. Plus, central banks, particularly those of Russia and China, have been buying gold at the fastest rate since 1967 as countries seek to diversify their reserves away from the dollar. This seems like the latest scheme by Beijing in its long-term mission to stomp out the dollar and make the yuan, the Chinese currency, the world's dominant reserve country. And it may bring this plan to fruition very soon. What's the truth behind the China-Brazil trade deal? In an anticipated turn of events, China and Brazil will be exclusively trading in the Chinese yuan. The previous trajectory to convert transactions in the US dollars is now long gone. For Brazil, the currency exchange deal with China is a means to promote greater bilateral trade and investment. However, due to ongoing increases in the value of the US dollar and the effects of the US Federal Reserve's interest rate policies, the deal is also being touted as a cost-saving measure. Meanwhile, Beijing views these moves towards direct currency exchange as a way to protect itself from international pressure. In the wake of Russia's unsuccessful invasion of Ukraine, US President Joe Biden warned that severe sanctions would be imposed on anyone who provided weapons to Russia. a statement that has resonated with many nations. As a result, countries are seeking alternative financial systems to reduce their reliance on the US dollar and avoid being caught in the crossfire of potential economic sanctions. China's chairman, Xi Jinping, has accused Western countries led by the US of implementing measures that aim to contain, encircle, and suppress China, posing unprecedented challenges to the country's development. Foreign Minister Qin Gang also stated that while the US claims to want to compete with China and not seek conflict, its actions of containment and suppression constitute an all-out effort to engage in a zero-sum game that could have life-or-death implications. These remarks highlight the growing tensions between China and the US, as well as the perception among Chinese officials that the US is attempting to stifle China's economic and geopolitical aspirations. What's the geopolitical reality of de-dollarization? The geopolitical value of the deal to Beijing is significant as China has aspirations to become a great power on various fronts, including making the yuan a dominant currency in trade and as a global reserve currency. However, the yuan has a long way to go to achieve reserve currency status, as the US dollar accounts for about 55% of global central bank savings. The euro accounts for about 20%, and the Japanese yen just 6%. Similarly, the Chinese yuan and Australian dollar each account for less than 5% of global government cash stocks. Even then, the Chinese yuan is making progress towards its goal. In 2007, the US dollar made up 69% of global currency reserve holdings. However, this year the yuan has moved up to the 4th position in the international payments market, behind the US dollar, the euro, and the Japanese yen. In 2010, the yuan ranked 35th in the international payments market. The Belt and Road Initiative and the expansion of offshore yuan transaction centers have provided foreign financial institutions with greater access to the yuan. So, all things considered, China has been silently working on toppling down the dollar, and it has just begun. Is de-dollarization a global trend? More recently, de-dollarization has become a significant theme in other regions of the world as well. For instance, Brazil and Argentina have been discussing the possibility of creating a common currency for their respective economies, which are the largest in South America. Former Southeast Asian officials have also spoken about de-dollarization efforts underway at a conference in Singapore in January. The UAE and India are reportedly in discussions to trade non-oil commodities using rupees instead of dollars, according to Reuters. And that's not all. In a significant shift, Saudi Arabia has announced its openness to trading in currencies beside the US dollar for the first time in 48 years. And if the decision goes through, this will be a huge blow on the dollar's faltering global position, perhaps the final nail in the coffin. Yet many experts do not anticipate the end of the US dollar's global sovereign status anytime soon. Currently, central banks continue to hold approximately 60% of their foreign exchange reserves in dollars. The trend of diversifying currency reserves away from the US dollar is clear and continuing. Central banks worldwide are buying more gold than they have in over 30 years as a hedge against the fluctuations of the US dollar. This move shows a desire to reduce their exposure to the US currency. Additionally, the US dollar is experiencing serious competition for the first time in decades as other currencies, such as the Chinese yuan, gain ground. So the tides are changing. Which currency do you think will prevail in the end? The collapsing dollar or the yuan? Let us know in the comments below and check out our next video.